Good evening, traders. Typically I try to do my videos early in the morning, but today I'm going to do it in the evening. Having trouble getting them done in the morning, it seems like. Just a couple days ago, I was actually starting to look towards the bullish side, and they came in and just chopped our heads off on that one. Yep. So bottom line is, you guys who've been watching my video know just last week how I was really laser focused on that 100-year uh, uh, trend line from 1929 to the tech bubble, and how we are currently trading right at that level. Okay, and 1 second, I can actually pull that chart up real quick. Oh, before I get too far along in this video, I do want to point out the potential. We got a double top here on the TNX. We might be going into a period of time where the bond or the interest rates might actually digest or actually reverse back down for a tad. So we definitely want to keep that on watch. That would be more bullish on equities if that happens. Definitely we are through the gut of the bond auctions that were helping support the bid in the bond yields. So be mindful of that as well. So let's definitely keep that on in the back of our minds that bond yields might be coming down the next several days or into the inauguration. So, okay, guys, this right here is the trend line. Excuse me. That I've been preaching about. This is your 100-year trend line, and we're still currently trading right above it here. And even with all the bearishness today, we did not come back down into that 100-year trend line. So we definitely want to be mindful of that. You know, they're obviously, despite how bad it was looking and the breath was just looking horrible, they just weren't able to manifest down into what should have been a major backtest area uh, in today's session. So be very mindful of that. I don't care how bearish you are. You have to see that for what it is. Okay, so be very mindful of that situation. Now, also on the weekly, similar situation here, guys. Last week we came down, we tagged the 20 SMA weekly. Okay, guess what? We did not do that again today in a very bearish tape, and they still could not get it all the way down into that uh, 20 SMA weekly scenario. So, those are some small takeaways on the bullish side we have to take forward into tomorrow and think about. Okay, further on here on S&Ps here, we know below 6,000 things get really scary here on the S&Ps. S6000 on SPX is about 6,025 or somewhere around that, 6,025, 6,050, somewhere around that on the ES. It gets really iffy here on the trend. Okay, guys. What I do want to point out here, what happened today in the markets? I do want to point out. See these little trend lines I got right here. This trend line here. This trend line here. So let me go over here on a different time, clean slate here, and I'll put this on a weekly time frame. Okay, and all you guys can do this. Okay, and if you just look here, you see how we're, higher lows, we're still a higher low. Okay, if you put a little trend line off this right here and off of last week's closing print, so bottom of the body is what you're trying to do. You're really bottom of that body. So this is our primary long-term trend in the markets. Okay, guys, this is our primary long-term trend. We are currently trading below the primary long-term trend. So the trend so far this week is bearish on the long-term time frame, even though, despite the fact we haven't made a new lower low on the weekly. Okay, now we go on to the bottom of the very short-term time frame here. We draw another line right there. Okay, guys, right off the bottom of these 2 weeks right here. Okay, guys, right out the bottom. You see where we closed? We closed below the bottom of that as well. So we have we potentially are starting a new downtrend in the markets. Okay, and we closed our session below, uh, you know, on the weekly time frame. We closed below our weekly uh, bull bear cross lines. Okay, and it's not necessarily bullish, but closing down here, we're still technically in price discovery to the downside. Okay, guys, so be very mindful of that on your trading. Okay, now if I go back over here, I've got them already drawn off on this other time frame. We'll go back down to my 1 hour time frame here. Okay, guys, and 4 hours. Sorry, 4 hours is what I was going to show you. Okay, guys, and if you zoom in here, right down here, S&Ps are only one that have not completely filled their election gap. Okay, right up here is the prior high. Very, very important support right here. Very, very important support. So we can push below that support, and recover it, but it starts to get really very dangerous that we are starting a head and shoulders breakdown once we go down into this area. Okay, that's probably that's likely the main reason why they haven't tried to push down there for the actual election gap. The Nasdaq and the Russell, the Dow, they've all filled their election gaps. The S&Ps have not yet. Okay. Other takeaways I want to talk about going on here. So we have not tagged the market maker move flow of the week. So that's still more bullish. We're still right within our predictive range. No matter how bad the breath was today, we're still inside our predictive model for the week. Okay. Also, being said, okay, guys, this here is the FOMC drawdown. You see the wick on the 4 hour right down here? I've got it drawn out with this purple rectangle. Guess what? The last 4 hour candle of the trading day, which starts at 1 o'clock every day, with Thinkorswim, we held above the FOMC wick. So we have that as a takeaway going in tomorrow. If we come in going back into this wick area, that's going to be extremely bearish for the markets. Okay, so this last 4 hour wick right here is very important going into tomorrow's session. So that's the takeaway we got to definitely keep in the back of our mind going into tomorrow's session. Okay. Sorry, excuse me. We did manage to close even green on the day, believe it or not. After all the turmoil in the market, we managed to close green despite everything that happened. And there was some pretty uh, wide price action intraday there if you were a day trader. I mean, they were moving it pretty good there. So, that's what 2025 is about, volatility. And I know it doesn't seem like that much, but those options were really moving. So just be mindful of that. And so there's a lot of intraday action happening there. You're going to make quite a bit of money today if you'd have timed it right and stuff. And I was actually early on this morning calling for a move back up into. So I was calling for, down in this area. I was no, before that. Yeah, okay, over here, yeah, over here. I was calling for a move back up. Okay, and see, that's wrong time frame. It's 1 hour. Yeah, there it is. I was on the 5 minute time frame that I was looking at today. Sometimes Thinkorswim has the charts messed up. So I was back over here and I was actually calling out a move back up into the trend line. Okay, which we did not get until later in the day. So it was about 2:25 that it actually happened. Um, so I was writing this up, and if you put your market volume profile on your charts. Let me turn that on real quick. What happened? We came up and we rejected value area low on the daily time frame. And once we started coming right around here, around 11:50, over in the live trading room, I actually called out the short, and I did the risk reward analysis. Basically, let's see here. Do I have? Yeah, I got Epic Pen over here. I'm sorry, didn't see it. I basically did a risk reward analysis real quick, like on the fly, for the guys over there in the trading room. And so basically, you take. I was looking at this volume profile right here, and I had drawn out the risk reward right there. And let me go up with this. And I was actually looking down here, just being conservative. I was thinking we'd be coming back down, back testing this, but we ended up overshooting that considerably. And what this is actually is down here near the lows of the session. Um, I was actually looking at this risk reward. It's about a 3 to 1 risk reward to be going short at this point right here. So that's kind of what I was thinking about was happening right then and there. But actually, I didn't have it drawn. I forgot to put on my ES chart. I put on my SPY chart. Let me erase it real quick here. If you go out on the 1 hour and higher on market webs, anybody wants to study, just let me know. If you go 1 hour and higher, you get the weekly volume profile instead of the daily volume profile. Get this thing loaded up here real quick. And bottom line is, you just put a little trend line right there. That's value area low for the week. I'll just draw on here real quick. And then we'll go back to our 5 minute. Okay. And see what happened? We came down to that trend line and found support at the weekly value area low. Okay. See, it held a support at 730, held a support at 10, what's it, 1010, and we looked down just a little bit further, and the moment they came back, the triple tech, we came back, we had rallied off of that, and like I said, the last 4 hours, they were consolidating at higher prices. So really important to understand how the volume profile works. If anybody wants a tutorial on it, I've got those made up too. But obviously they were sitting here, they were really trying to buy this dip into the later part of today's session. So I don't know how it's going to play out tomorrow. I just want to definitely mention that going forward here. Okay. Okay. Then if I go over here to my volume leaders, and one big takeaway that I had going on here early on, or up to 3 o'clock today, right around 3 o'clock today, everything here on the biggest trades of the day, the biggest trades that we're hitting up to this point at 3 o'clock today, everything was SPY. It's rare to see 5 big SPY trades, the biggest dollar trades of the entire trading day. And I was like, what is that trying to tell me? And I was trying to figure it out from 3 o'clock on, trying to figure out what was going on. And here's how the trades were actually, they were hitting the trades. So, we got back, when we got back down to the weekly value area lows, we had 4 of those trades hitting down here. Okay. And these tend to be institutional trades. Big money buyers are doing these trades. And we don't know if they're buys, we don't know if they're sells. Well, then we saw in the afternoon, and like I said, the 1 o'clock starts the 4 hour charts. Okay. So basically, we're putting in a higher low, and the glut of those trades coming in are coming in above that 4 hour higher low. So I do want to point out in these institutions, you know, uh, obviously it looked to me like that there was a bunch of possibly buying out there, and then there at the very end of the day, they couldn't get all those orders filled, so they didn't execute them into the very latter parts of the day. So be very mindful of that. Like maybe there's big money buyers sitting out there in the markets after looking at this stuff. And then what happened was at the very final prints of the day, then we started seeing some big action. NVDA was the big action. So far, that action was taken as negative. Okay, and some of these brown prints right here, those could have been prints from 24 hours ago. So you don't want to read too much into that. That could be old data on those beige prints there. So sometimes when they're even like that, when they're all about the same size, and landing all at the same price point. So we know going forward into tomorrow that the 140 area is very important for NVIDIA. So seeing those prints land right there, plus a big one today, this may be more bearish action for NVIDIA into the close. So seeing the combo of those trades right there, in my opinion. Apple, and we know Apple or NVIDIA actually, that big sell. Let me go on my thinkorswim chart real quick on that real quick. That big sell, that is a Marabusu reversal pattern off of an all-time high. Okay, that is a daily Marabusu. Whenever you have a big gap up that just completely gaps down like that, that it tends to be a major topping signal for an equity. So it doesn't have to be, but it does tend to be. So we at this point in time, as long as we're still holding price over the 137, like we're even after hours, we're still holding price over that. So at the end of the year, we had a big order that hit at 137. Okay, we're still holding above that. So I don't want to get too nervous in the markets, but once we start, if we start coming in tomorrow losing 137, I'd start getting a little concerned on the whole NVIDIA trade idea. Okay. Other things, Apple, big order there at the end, similar situation. We had big orders that executed yesterday, potentially executed yesterday. Then we had another one today right at the same price point, and we're drifting off below that in the after hours early on this morning. That could be a bearish signal. So I definitely want to keep that one in the back of your minds as well. Okay, these are the big trades that hit right at the end of the day. If you remember, guys, these are the big trades of the day. Okay, so let's definitely keep these ideas in the back of our minds. Microsoft. Okay, a lot of trades right here, fading off below it, a little bit after hours here, and a big trade hit. So potentially, they were coming in at this price point, selling yesterday, and somebody who knows what they're doing saw those big trades that are going to show up today in the print, and we got back to that same price point, and they decided to put sell orders in. So let's definitely keep this in the back of our mind going forward here. Tesla, similar situation. Bunch of trades happened 24 hours ago. Potentially, we're trading below those again. Possibly bearish action going into tomorrow. Amazon, potentially exact same thing. So all of these are doing the exact same thing. The 5 biggest trades of the day all could potentially be sell side action. So we know that this closing print going into tomorrow on these 5 names are very important. If we're coming in tomorrow gapping below on most or all of these 5 names, it's probably not going to be good for the overall markets. So basically, even after everything, we had all that SPY action coming into the markets. We've got an indecisive candle on the S&Ps. So you don't want to think of it as bullish, okay? It's indecisive. So what we're going to be really looking for is that 4-hour candle potential break early on tomorrow to give us a directional signal. The directional signals I personally think that we are seeing from the megatech are bearish. So that's my main takeaway from seeing what I'm seeing in the evening wrap up here. Normally I go through the NASDAQ, I go the Russell, but the S&P rules them all. Okay, and since that's where the volume was all hitting today, I really didn't want to go in through too many more of the charts. We had some other little outliers here, but pretty much the volume just came in the last 5 minutes of the trading session. That's when the volume just really came into the markets. So just be mindful of that going forward here. And the price action after that volume came in, it isn't looking too overly promising here. So this is one of those situations where they come in, they fill those orders right at the end of the day like they did, and we come in the next morning and we have a gap down scenario. So it's definitely be mindful of that going into tomorrow. Okay, guys? So thanks a lot for listening, and I will see you on the trading floor. You can like me at Gumby9662C. That's where I'll post my chart on Twitter. And be sure and like it there. And I have YouTube. Please like me. And I love the comments below. If you can give them to me, really appreciate the feedback. If you can give it to me, hopefully this helps everybody out tomorrow. From what I'm seeing right here, right now, and it plays out the way that it looks like it's going to play out tomorrow. So a lot of times, they've really been doing these end of day 4 o'clock trades, and it's really been uh, they've really been tricking a lot of people. So, and this could very well, this end of day rally could very well be a trick again. Okay, thanks a lot.